everyone. I'm Bill Urbanik, one of the managing partners of SecondHalf Coach Wealth Management, and welcome to another edition of Hot Coffee, Hot Topics. Today we're here with one of our strategic partners, JJ Rettura of Laurel, Highlands Insurance Group. JJ, thanks for being here today.
Yeah, thanks for having me, Bill.
JJ, let's start by telling our audience here today a little bit about yourself, your company, and background.
Absolutely. So we are an independent insurance agent located here in the Laurel Highlands. Our agency is one of the oldest Erie insurance agencies in the company, originally appointed by H.O. Hurt, the founder of Erie Insurance. In 1997, my father, Joe, purchased the agency. So we've been around as a family agency for 30 years, or roundabout. Myself and my mother, we both work there, family business. We've got a bunch of great employees, been with us for a long time. And we do everything from your auto, home, business, life insurance to take care of whatever you need.
That's great. And it's nice that your employees feel a part of the family and everything. I'm sure your clients do as well.
Absolutely. You know, we have employees that we now have their kids and their grandkids and things like that come and work for us. And we're seeing with our clients generation after generation, and some have been with us for 50 plus years.
We've seen the same thing over the years. It feels good to when you're handling multiple generations of the same family. It's kind of a pat on the back that you're doing a good job, and that that you're their guy or girl when it comes to handling a specific area of their life.
Absolutely.
Such as protecting their very valued and important assets.
Absolutely. It's a very rewarding feeling to know that they have that trust in us.
Mm-hmm. Now, what companies do you represent? You mentioned Erie.
Yeah, so our main carrier is Erie Insurance. They are pride and joy. They're a wonderful company, have a great product and great service, great price. We also have companies like Progressive, Mutual Benefit, Travelers, and a handful of other companies. We use those more for specific risks. Not everything fits with Erie, and we use every company for a different reason.
Mm.
So
it's interesting you bring that topic up because last year I bought a side-by-side. And I see you're sparking. They can, depending on what company you work with, can vary quite a bit in the price of the cost of insurance. Found that is Progressive who you would use for that?
Absolutely. They get all of our toys, our boats, snowmobiles, motorcycles, side-by-sides. They excel in the play toy market.
Okay. I mean, that's good to know. And so as we all know, prices on everything have been going up for over a year now, few years. These costs were supposed to be temporary. These cost increases are supposed to be temporary, although they seem to be sticking around. Can you talk a little bit about how insurance rates have been, and here specifically in the state of Pennsylvania, the cost of insurance and what you've seen from that?
Yeah, absolutely. So prior to 2020, the insurance industry was in what's called a soft market. So essentially, insurance companies were reducing rates in order to be competitive. They were loosening up on underwriting guidelines. That way, they attracted more business. So nobody expected 2020 to hit. When we did go through the pandemic, inflation occurred. The insurance companies' rates weren't sufficient enough to offset the losses. So that being said, now these insurance companies are having to increase rates left and right, tighten down their underwriting guidelines so that they're bringing better quality business in and also charging the appropriate rate for the risk. So right now what you're seeing is insurance companies across the entire industry, they're increasing those rates. Luckily for us, with Erie being our main carrier, they're a very financially sound and fiscally responsible company. So they were able to do a few things in the back end at the home office in order to offset those rates and keep their pricing, as they like to call it, steady as you go, and not have our customers receive a significant rate increase over the last couple years.
Well, that's really good to know that. I mean, to not be so negatively impacted by COVID, which was really an out of nowhere experience for so many of us and affected so many industries in a big way. The fact that their fiscal responsibility that they've taken gave them the flexibility needed to make sure that the rising cost of insurance wasn't just one other really big painful thing to go through during that time for their clients.
Right.
You know, JJ, I think a lot of people, with what we do for a living, clients get their statements and stuff and review things on a pretty ongoing basis, have online access to their accounts and can look as often as they want, daily, hourly, even like some may do, see how things are going. With regards to insurance, how often should clients review their insurance policies with their agent and go back through everything and make sure that their original intentions are still in line with what things should be today?
Right. So you should at least review your insurance annually. With the way that the world changes so fast anymore, it's important to make sure that you have the right coverage to match your risk, especially if you have different changes in your life. You've got new kids, buying new cars, you buying or building a new house, job changes, anything like that. It's super important to make sure that you reach out to your insurance agent to review those things with them to make sure that the coverage is adequate for what your exact risk is.
I've got with regards to that, like talking about reviewing your coverage, one of the things we do here at SecondHalf Coach Wealth Management is we have, professional days where we bring in some of our strategic partners and they review things for our clients that is not within our area of expertise. An insurance policy review day coming up here on Wednesday, March 27th, next month, that people could sign up for time slots and have JJ review your current coverage with you and see if you're missing anything or see if there's anything else that needs to be added or maybe you have something that's not providing the coverage you think, get his opinion on. JJ, can you walk our listeners through, our viewers through that, like one of those time slots, like how that normally goes?
Yeah, absolutely. So best thing to do on that day, you're going to come in, make sure that you have your current insurance declarations pages with you. That way I can sit down and look at exactly how you're covered, all of your coverage limits, what you have, what you don't have. So we'll go through it line by line, make sure that you understand what each coverage does and how it performs in the event of a claim. And then we'll also look at those coverage limits to make sure that they're covering your assets properly. If you can't make it to the insurance review day, you can reach me by phone or email, or I even make house calls. So I can come to your home. You can come here right to SecondHalf Coach. We can sit down in their conference room and have a meeting outside of that.
Okay. That's great. And we're looking forward again, and that is March 27th. That's a Wednesday. Those slots fill up fast, as you can imagine. There's no cost for these reviews to you for being a part of our client family. So make sure you call in and take advantage of that opportunity. One of the things I wanted to talk about is a common question that comes up is for myself, when I travel and I get a rental car. And that you're signing all those things and you're going through that long process that takes like 15 minutes or more for them to give you, and you have no idea what they're doing on the other side of that screen. And before you get the keys to this rental car. And the question comes up about adding insurance. What are your thoughts on that? And are we covered as, can you be covered as a driver for rental cars just on your basic coverage?
So first and foremost, buy the insurance. Your current insurance policy will cover the rental car as long as you have physical damage coverage, so comprehensive and collision. The problem lies if you have an actual claim with that rental car. What happens is most policies, they do not cover the loss of use. So the loss of use being the time that vehicle is in the body shop being repaired. So if you're renting it at $50 a day, it's out for 10 days. the insurance company doesn't cover that $500. So you're on the hook for that $500.
Mm-hmm.
I was just actually on vacation, and I was asked that same question, and you better believe that I ended up buying it.
That's really good advice. So like if you're borrowing your Aunt Sally's car, you're probably covered if you have the right type of insurance.
Correct.
Because she's not renting her car out.
Correct.
Therefore, if it's in the shop, she's not losing revenue
Correct.
from it being in the shop. But with a rental car, you're not only liable for the repairs, but the loss of revenue that company is not getting because it's out of commission.
Correct.
And that's where that insurance comes into play.
Correct.
Now, there's sometimes different levels of insurance they offer you. Do you have any thoughts on that?
I honestly, I can't speak to that.
Okay. So maybe just the advice would be to ask plainly what each level covers.
Correct.
And to make sure that you're being covered for that loss of use.
Correct. Each rental company is going to have different levels of care and coverage. So it's going to be important to review each one of those levels and see what fits you the best.
So the moral of that story is buy the coverage so that you're not paying for a rental car even when you don't have the rental car.
Right.
Well, another thing I'd like to talk about in Western Pennsylvania, this has come up in recent years, more so than ever, because of winters being a little more mild and what was once snows turning into heavy rains, and water damage in people's houses, which is a nightmare. And, in Western PA, we all got those basements, right?
That's right.
So that causes a potential problem. Can you talk about some of the pitfalls that people find themselves in where they think they're covered and they're not, or what types of additional steps they have to take to make sure they're covered as well as possible?
Yeah, absolutely. So all homeowners policies cover water damage as long as it's covered by a peril. So meaning wind, water, fire, hail, whatever it may be. So if you have hail damage on your shingle, it fractures the shingle and water enters your home through that fracture, that's going to be covered. The area where we get into a little bit of gray per se is whenever water enters your basement or home through other means. So for instance, through a drain in your basement, you have a clog, it backs up, whether it be through a broken pipe or maybe tree roots in a drain. You need to make sure that you have sewer and drain coverage added to your homeowner's policy. Typically, that coverage starts at $5,000 as far as the amount of coverage available. So if you need more than $5,000, you have a nice finished basement and you've got carpet, drywall, a wet bar, whatever, you need to make sure that you have higher limits than that because it's going to cover the damage to not only the building material, but also your personal property. Additionally, water coming through windows, doors, anywhere like that is considered almost flood. So there are coverages available on homeowners policies now where you get extended water coverage, which will cover that water coming through those different areas. So if you're concerned about that, make sure that you purchase that as well. However, there is a little bit of a layup period before you can actually engage that coverage if you have prior damage.
Okay. So heavy winds damages some shingles, some rainwater gets in, you're probably okay.
You're good.
Toilet backs up or bathtub overflows because someone forgot to turn the water off, probably not okay. Well, unless you have sewer and drain backup.
If the bathtub was left on and it overflows, that's going to be covered.
Okay.
But if there is a blockage or a broken pipe that resulted in that overflow, that's where we're going to get into a little bit of an issue.
So I mean, there's some fine print there that people got to make sure they understand.
There is.
So that they understand that they, the coverage they have and it's what they feel comfortable with. It's interesting that, water comes in through the roof from damaged shingles, whether that's wind or hail. But water coming in from groundwater through the foundation, or sometimes you have water rising up the water table, that's where you say we enter that flood. So even a heavy rain, though it's a storm, but it still enters into that flood category instead of an act of God, they sometimes say.
Correct. And it's very important to make sure that when you do get your policy every year, you're going to get what's called a policy jacket. That's going to be all of the legal jargon and explanation of what's covered and what's not covered. So you're going to want to go through there line by line. I know it's not exciting stuff, but it's very important for yourself to make sure that you go through and understand what's covered and what's not.
Oh, that's really good information. And I have to tell you, in all the years I've been doing this now for 22 years, and I can't tell you how many people have come in and needed money from accounts or something because they've got some sort of water damage in their house and they thought they were covered and they weren't.
Yeah.
So this is a really big issue. It's a potential pitfall financially. So make sure you're getting your coverage reviewed. Like I said, JJ will be available here on March 27th to do that. And that's not the only day. If you can't make that day, like he said, he'll sit down with you another day to go over that and make sure that you're covered where you need to be covered so that you're not getting that big bill because of some water damage on a heavy rain. So let's talk a little bit about the liability limits and deductibles and things like that. What do you see as like the common amount people hold on their houses, and do you think there's a sweet spot there where premiums really get impacted favorably, or is there an excessive thing that people like maybe don't need that you see?
Yeah, so as far as deductibles are concerned, our typical deductible runs at $1,000. That's where we start all of our homeowners policies.
Mm-hmm.
More and more, we're seeing folks take out a $2,500 deductible, sometimes even $5,000. You really don't start to see a savings until you hit the $5,000 deductible. There's not a large difference in premium between $1,000 and $2,500.
So with that being said, if you're not willing to pay up to get the $5,000, probably best to just stay at the $1,000.
Correct.
I mean, that's really good advice. Going back to the rental car thing, I just popped into my head again. When you have an auto accident and maybe you drive a truck or you drive an SUV because you've got a lot of, 2 or 3 kids that you're hauling to hockey or practice or something like I have to do, and you go and you get in an accident and you go to get your rental car that your insurance is going to pay for, and you find that the coverage that you have is not necessarily maybe covering you to get a comparable automobile that you're used to driving. Mm-hmm. Can you speak to a little bit about that and steps you can take to address that issue?
Yeah, so it goes back to reviewing your policy with your agent. Go through it, make sure that you have either the correct dollar amount or the correct class for the vehicle that you're driving. So depending on what company you have, they're either going to give you a specific dollar amount per day, or they're going to give you a specific class of vehicle, like, for instance, a minivan / SUV, or a pickup truck, or a luxury SUV.
Mm-hmm.
And most of those have a time limit. So they're mostly capped out at 30 days or a maximum aggregate amount with a dollar value attached to it.
So if you're out there driving a Tahoe and you depend a lot on that space and your coverage is covering you for $20 a day,
it's not going to do it.
You're not going to get a Tahoe or anything even remotely comparable, right?
No.
But there are steps you can take to assure that, you might not get the exact car, but something that's reasonable as a replacement goes.
Absolutely. Like I said, just make sure that you're reviewing the coverage with your agent and seeing what you have and making the necessary steps to either increase it or decrease it to match your vehicle.
And just one of the other things we've seen from the COVID epidemic is when you wreck your car and things like that, they don't get as fixed as quick as they used to. Whether it's part availability from overseas, or maybe it's made right here in the USA, but they've got a labor issue, and there's a a weight for a fender or a sensor of any kind, you might be without your normal car for more than you would think.
Right. And it's an unfortunate thing, but that's what we're dealing with right now. We're lucky that on our policies that we write, we actually have a specific endorsement that we add to every policy with full coverage vehicles that gives you 10 extra days of rental car coverage on top of your original allotment. So to cover those instances where the body shop has your vehicle for an extra 5 days because they're waiting on a part. Maybe it's because you haven't found the exact vehicle that you want yet because you have to search for 100, 200 miles out rather than right here in our local area. So they give you that extra time because they understand that things have changed.
Yeah, things have changed. But one thing that hasn't changed is the need for you to be engaged in the important things in your life, to understand what you have. And you've worked hard for your assets. You've worked hard for to have your homes and your cars and your toys. It's okay to have some toys here too. I've sure got my share of them. But you want to make sure you're protecting them and make sure that you're getting the coverage that you think you're getting. And in order to do so, you got to be with an agent and an agency who's taking that time to thoroughly go through things. Like I said, we have all the confidence here in JJ and his agency, and I hope that you will reach out and schedule one of these review days on March 27th. And if not, if you can't make that day, another day, and see if JJ can help you out. Maybe even save you some dollars each month.